Thank you for joining us the past year when we had various guests, more than 20 guests in banking and insurance. It's been an exciting year. Thank you also all for the feedback, and please share your feedback with us. We have a few highlights that we would love to share with you. So please follow us and enjoy those highlights. Thank you. How much do banks want to evolve into becoming more of an ecosystem partner platform and not owning the clients?
Everyone is in the fight to win eyeballs and screen time. Banks need to realize that, in all honesty, they're losing that fight. And it's impossible with this next generation to get as much attention from them natively via a banking app. That's my honest view. So you have to think very carefully around what is the next generation doing? Where are they spending their time? And how does our proposition just seamlessly integrate into the way that they live their lives? And sometimes I feel that banks focus too much on the product itself, which doesn't have as much longevity. So for example, with the deposit rates right now, the VBs may be going out offering aggressive rates, but how long can they sustain that? And once you realize that you can't differentiate that product pricing proposition for too long, you default back to where your competitive moat is, and then you realize most of those deposits go back out the door, which we've seen happen. So the evidence is there.
How do you then advise those banks? How do you work with those clients, and where do you help them?
It depends on the maturity. Sometimes it's just about the education stage, really making boards, management teams, C-suites aware of where the industry is going to go. People naturally are motivated by incentives. So how do you change that mindset? There's push factors and there's pull factors. The pull factors are, is this interesting you? Is this drawing you? And the push factor is really when it comes down to what I would call the regulator saying, no, we need to move in this direction for the benefit of this city's future. This is the way we have to go. A regulatory handle can be very strong in changing what people do. Once it's mandated, you tend to find people just do it magically.
Do you regret having to go on that path of running a fintech company?
I regret it for my family. I don't regret it for me, and I'll tell you what I mean. Running a startup for 8 years where you don't exit and basically don't get paid is not just hard on you, it's hard on the family, right? Like it's a tough path. You are bringing along not just yourself, you're bringing along everyone else. I said, I was a C-level guy at a corporate, so you get paid pretty good money. So you're giving up a pretty good thing. It doesn't make any sense, right? So I think if you looked at it from a logical point of view, if I took it as a whole, do I regret it? Yeah. Do I regret it for me? The highs of highs that I got, standing on stage, being told that you're the, fintech of the year, walking into an investor and he shakes your hand and you raise $10 million and you walk out of that room thinking you're, superhuman, building a company that at one point, so proudest moment, I don't know if people know this, Bamboo was awarded the best place to work in Singapore of any company. On all of Glassdoor, we had the single highest rating. Over 90 people, we only got 5.0 for every single thing. And honestly, the high of high for bringing a group of random people together and them all believing that we were going in the right direction for my ego, just being honest, it was amazing. Is it fair on everyone else? No. So I don't regret it for me, but I regret it for the family. Would I do it again? No.
That also shows you it's definitely not an easy life. And but would we have electric cars than what we have today without Tesla? Would we been flying again or try to fly even to Mars without Elon pushing it? And of course, NVIDIA, it's now one of the the biggest companies in the world. And so we need those startup entrepreneurs. And I'm grateful that I met you 10 years ago and you were on stage on some of the events. It also inspired me because I'm also still an entrepreneur, and while we are a bit bigger and profitable, thank God.
Which is a great thing.
Which is a good thing to have. We're still a comparably small or medium-sized company, and it's tough every day, and family definitely feels that if you run it. I mean, we've heard about this now a lot the past 18 months with ChatGPT being launched, but do you see impact in investments, and if yes, what?
In the last few years, it was about research. Now we are at a phase that these are all the very useful and helpful application that helps our daily lives. So back into investment. For one person, you can read 2 newspaper a day. Maybe that's already quite a lot. But with a machine processing data in split of a seconds, you can process a lot of different news, different data, and the difference is multiples. So what is really important is that if an investment manager managed to get a lot of information processed from AI, from ChatGPT even, from different AI algorithms, different models, it will be so beneficial to them. So one of the things is machine learning or AI is very good at finding nonlinear relationships. So if we look at a spreadsheet that we will be able to pick out some details, machine can pick out much more than that, especially those that are not so obvious.
How can it then particularly help in making improvements in investment decisions?
There are more specific products specialized in different areas, and there are too many choices, so many choices for investors to choose from. And that may make them lose the big picture and the overall direction. So what machine learning is helping them is to draw them back into having a very systematic, data-driven approach. Everybody's going on the same product, same investment product, and when the market is selling off, is a panic selling. So those are irrational decisions that a human must have in order for them to make these kind of investment choices. And those are the things that we think that giving them a systematic AI approach is really important. That takes away all the emotional biases and all the irrational decisions and allow them to make systematic choices.
I understand CRIP is kind of a centralized credit card deals and offer platform. So maybe you can quickly introduce.
Consumers are actually they face a very strange issue here, which is they're spoiled by choice, right? So they have access to so many deals, but the banks haven't done a great job in creating an infrastructure that allows customers to find out that they have these deals. So we created an aggregated platform where we've centralized all of these deals into a single platform, making it easier for consumers to find these deals.
What specifically to come for CRIP? How does it help the banks then in the future if they work with you?
I think a lot of the banks are working in the right direction, but it's the execution side, right? So I think that's where they need to cross their internal hurdles to make sure that gets done faster to meet the customer demands. We're here to help optimize that process. And so right now it's about getting access to customers, but as we think sort of long term, it's again about how data can facilitate the banks to do better. Our database can effectively help them understand what their competitors are doing and then find their own way to carve out their niche.
Where do you think this journey could go with AI?
It's about the personalization. And when we say personalization, we're talking about genuine hyper-personalization, right? It's not, a lot of the personalization now, it's actually based on customer segments or customer cohorts, which worked very well for the last 10, 15, 20 years. But I think now as information becomes so much more, there's just so much information in the market. As a user, you want hyper-personalization. You want the brand or the product or the service to actually understand you and what you want and what you care about. And so banks need to understand that. And the best way to engage with the customer is to be that bank that actually understands the customer's needs, ideally before they even know. Right. So, for example, if if they're able to look at my credit card spending record, they should understand the kind of stuff, the kind of merchants I like to engage with. Right. So, for example, if you are keen to support sustainability brands, for example, then they should understand that and hopefully push deals that are in that space that you care about. Right. So I think for sure banks need to work towards that goal of just providing that kind of user experience, and that requires quite a lot of different moving components to work as one.
Are there some key differences you see as something that is maybe also lacking in banking?
Pricing is often rather a new concept for many banks, right? The type of price management work that we do, and it's not really seen as what I call a critical lever of growth, a critical lever for revenue generation, right? And that's why it's often not prioritized. And when we look into other industries, I think one of the big differences between banks and, let's say, take a manufacturing company, etc., is the element of cost. Just one price usually fits none, right? It's also not in line with how banks deliver services. So there we always say, ideally we have a well-differentiated product proposition and then also below a well-differentiated landscape where clients then can choose the service levels they want to consume, and then of course based on it should have different price to account for cost to serve. And I think this is the fundamental problem of the bank. You provide advice, good service, but then you don't monetize the advice, you monetize the trade execution.
Yeah, exactly.
So actually in essence customers pay for something else. And here maybe an example, when you look at banks, right? So I think just the revenue mix, I mean, we've worked with many, they're fundamentally different. How they earn money, with which product. So it's not one bank is exactly the same, right? So because every bank has different capabilities, different market access, different service levels. So that's just the bank in itself.
Where do you see it going in the next 5 to years with AI and new capabilities?
I think AI can help RMs to come up, so decision support tools, right, to come up to better pricing decisions. So you have the idea of, again, providing maybe benchmarks or recommendations to an RM, what would be the right price for a certain customer. You're right. And this information can then be, for example, shown at point of sale, let's say in an order manager tools, right, when you do ad hoc pricing, what would be now for a given client and a given ticket size an appropriate price. And I think that the big benefit of AI, especially in the business where you have a lot of discounts, it can help to bring in a little bit more structure. It also helps to banks to avoid unfair client treatment, because AI can also help to analyze, for example, pricing anomalies, can detect overcharging. So I think or risk management, right? You have a lot of controls at the moment.
You also state somewhere, I think, online that audax means courage. What does that mean?
We had a long debate about this as we were thinking of spinning out the technology platform that we will provide to other banks. And internally as a team, we were talking about what do we call the new company. Then one day it struck me that maybe the best way to think about this as a new company gets set up, a business model gets established, and evolution will happen over the course of the next 2 to 3 years or 5 years. Perhaps it's not best to name the company after what we do, because what we do 5 years from now may be different from what we do today. So perhaps it's best to name the company after the kind of people we want, right? And the kind of people we want are people who are bold, people who will take risks, people who will push the frontiers and boundaries of what is possible. And courage was a term that kept coming up in our discussions as what is the fundamental principle needed to push this company. And obviously then we said, courage as a word, as a principle, and the word audax obviously is French or Latin for audacity and courage.
Do you see more openness to adoption of banking as a service models in these emerging markets versus the more mature?
I actually think that the geography impacts the reason, somewhat the reason why you would want to start thinking through a more scalable business model such as banking as a service. But the real reason as to why banks think in that direction is because the reality is banks trade at on average 4 to 6 times book value, right? If you are an investor in a bank, the question you will ask is, why do I put money there when I can put capital in a tech company and trade at 10 to 15 times book value. And in order for banks to compete, what they really need to improve is their return on equity, and therefore increase trading at book value. The only way for them, and I'm doing this waterfall chart, right, whereby the only way for them to improve the return on equity is to either lower their cost of acquiring the balance sheet that they have, or sweating the balance sheet harder in terms of getting better margins on the balance sheet. And inevitably that leads to, how do I then acquire and serve at a much lower cost than I do today via branches and RMs and at scale?
Maybe your own view, what gives you hope in terms of banking, financial services looking into 5-10 years from now?
I think banking as a service, embedded finance, open banking, the various permutations of open access to data is the first baby step. I think the real bank of the future, if I were the CEO of a bank, of a significantly sized bank that it has multiple geographies, or even a single geography for that matter, I would think through the bank of the future for retail and SME. I mean, corporates is a very, very different game. Is this. The bank of the future would execute 3 different business models for retail and SME. You would have a fully digital bank of some sort, whereby everything is cost to serve is low. You create a relationship with your customer and use it for testing your own processes. You will have a full embedded finance play / banking as a service with multiple ecosystems.
What is the current state? What is really the typical Hong Kong fintech scene, and how does it also compare maybe in the region or even globally?
In terms of financial services, what was happening in Hong Kong was pretty much up until 2016, 2017 was pretty much happening in every Western centre. So the fintech in Western markets tends to focus on a very narrow definition and looks at a function or a feature, and it tries to innovate that function and feature, and then you add it on. In China, it's very different. It's much more embracing of a customer experience, and you don't have those industry boundaries. So the innovations in the fintech scene in China are a lot more holistic. They surround the customer, and they do a lot more than what the fintech innovations that are happening in Western markets.
The really most or biggest trends, 2-3 trends you see in China for the next few years to come? Anything you see, anything you want to share?
The key learning that I always get in China is about the ecosystem. So the example of Ping An is a really interesting one because they focus on other ecosystems. I also think where there's grey areas, and definitely players like Didi Kuxing, which is the ride-sharing app, you had investment from Alibaba, from Tencent, and that really, the 2 major players in that area to get involved means that they're going to come up with the right solution. The second one is more about the influencer, being a marketer. The influencer economy is, and you've got platforms, but no longer are yourselves involved in the advertising and the promoting of your product. You've got influencers that have an authenticity that corporations would love to have, but they don't have. And they aim for a particular target audience. So if these influencers, and if you can find the right influencers that influence the right target audience, and they love your product, they will actually market it for you. So that's probably going to come more into the Western market.
What are some of the main challenges you see in the really incumbent traditional banks if you want to really modernize, digitize?
There is a big mismatch of costs and subsequent revenue and profit in banking. So a lot of the costs go in first, and then you make money over time once you have kind of perfected the model. And of course, it's a very good annuity stream. And even today, despite a lot of competitive pressures, there's quite a lot of banks that still have a 50% cost to income ratio. And that's quite amazing, considering that few companies make that kind of margin. It's also, especially the retail side, a business of just sheer demographics. And it's a local business, not a global business. So when people talk about building a global bank, there are, in my opinion, going to be very few global banks.
Looking at your book, would you write the book differently now than 5 years ago, or would you write it then also differently in 5 years from now?
It's a great question. I don't know if I know the answer. 5 years from now, I do think that banking is a simple business model that's very complicated to execute. So a lot of people focus on the simplicity, but don't understand the complexity. So it's not a simple business model that's simple to execute. It's a simple business model that's very complex to execute. And therefore, it requires, for the reasons I've mentioned, right, substantive attention to detail that is often missing. When the startups use banking, they see a simple business model that can be disrupted by technology alone. And then they find that it's not true. So you almost see very few startups in banking that have made it, right? And of course, it's easier if you're a new bank and, like I mentioned, right, it's a disruptive innovation, and the banks don't want those customers in the first place, because then you grow big, in an undefended territory. Whereas if you're Monzo or Starling and you're going after the banked population, it's much harder, because the banks will respond because those are bank customers that they want to protect. And then it's a more difficult journey.
You see still a more variety of investment solutions in Hong Kong, Greater China, than what you probably see in Europe. Not that they don't have it, but in a very low volume. Am I right to say?
Yeah, absolutely. So in Asia, the process has been a lot more on the advisory side and less on the discretionary side. But we see the discretionary element is growing quite nicely.
Yeah.
And that's, for one hand side, sort of in the private banking side, where you deal with single securities like buying and selling stocks, bonds, and structured products. And increasingly people want the bank to manage that, or at least a portion for that, or they mix it. And the second part, what we see is a lot of the mass affluent wealth in Asia sits in mutual funds. So now if you put yourself in a financial institution, if you own mutual funds on behalf of your clients, you advise them on mutual funds, the problem you have is that product is to a certain extent interchangeable. So you have a financial institution across the street who may offer the same fund. So it's a little bit hard to basically prove that value to your client. And now with everyone being online, that became even more transparent. So what we can offer for these people through discretionary portfolio management, you can say, oh, I want the BlackRock strategy, for example, but I want it personalized to my specific needs, and I wanted to replicate and buy and sell the underlying stocks and bonds in my portfolio.
Why do I need a complex portfolio management system? It's all done, and I can use my interactive brokers to manage this.
First of all, this big data and then the analytics and the AI on top, you can analyze a lot more investment options for the clients, and you can tailor it a lot more to what their specific needs or biases are, by visiting and exploring all sort of different options beyond what a single financial professional could even phantom in their head. It's always how many balls can you juggle at the same time.
Yeah.
And I don't see this necessarily that that's replacing a relationship manager or an investment counselor, but I think it puts them sort of on steroids. It allows them to sort of be sort of that, we always call it the bionic advisor. So half machine, half human, the Robocop, if you want to put it like that, who has that ability to explore all these options and give the best advice to the client. I do still believe that clients, for quite a large segment of the market will still want the human interaction. I think there's a pocket which the whole technology can be done completely direct to consumer, and that is something we're providing as well live for clients.
Starting with maybe personal finance, but then also towards personalization, both in a context of B2C, but also B2B.
Yeah.
What your company covers. What have you seen developments in the past 7 years since you started?
We actually launched an app in the market, which basically helped consumers kind of link all their bank accounts, all their credit cards, investment accounts. In Hong Kong, we have the MPF accounts, which is kind of like the retirement portfolio accounts, so that customers can see all their finances in one place and, can get sort of a lot of personalized insights on how they are doing. Where am I spending my money? How much am I saving? Do I have a lot of money to invest in? Do I need to save more in order to, have my emergency funds before I can start investing? Am I saving too much? Or is my portfolio diverse enough? Am I taking too much risk? So all these basic financial questions that we all ask ourselves, in kind of like educating ourselves through personal finance is what we attacked through the product that we launched. And what we saw through that is our hypothesis was correct because the product got a lot of traction. In a couple of years, we were over 300,000 registered users on the app in a place like Hong Kong, which is about sort of 5.5 million digitally active customers, right? So, and this is not with a lot of marketing spend and funding. So, pretty much with a little bit of marketing and mostly organic, we were able to get that word of mouth out there and get people, using the app. And more importantly, having the trust to link their bank account data with us so that, they can actually get the value. And so I think our hypothesis was correct that there is a segment in this market, who has an unmet need around personal finance. And we kind of figured out that we can actually use their data to help them, get that in an extremely seamless way.
How do you see the future trends now? And you're part of the AI Association also here in Hong Kong. What will these AI trends do when it comes to real-time personalization and so on? Any things you see coming in the coming years?
One of the key areas where we are focused on when it comes to, AI is in the space of basically hyper-personalization. The reason is because Gen AI, we believe, is very good at summarizing content and creating content. And one of the big problems we see with financial institutions right now is there's a huge process right now when it comes to actually launching campaigns to the customers. It goes through a huge approval process. It's very difficult to be very dynamic with customer because of the approvals it takes. So the content or the campaign generation cycle is just too long. And so that's where we see AI come in and basically, generate content in alliance with the branding guidelines, the compliance guidelines, and of the financial institution, and using that to basically deliver very personalized marketing campaigns or engagement campaigns to the customers. So I think that's somewhere where we as a company are looking at closely.
Those were the highlights of the first year of the Wealthtech podcast. Thank you for joining us. If you're interested to join the podcast yourself, please call us. And stay tuned for the next episodes.